Guys, listen now. Now we'll be discussing something called as international transfer pricing. What do you mean by that, sir? When division in one country transfers goods to division in the other country, at what rate we should transfer? That particular rate we call it as transfer pricing. For example, Maruti Suzuki India Private Limited transferring it to Suzuki of Japan. At what rate they will transfer anything to Suzuki at Japan, that price we call it as international transfer pricing. As per your taxation, there are very strict rules and all. Yes, we will not get into all those things that we are going to learn in finals. Now, here the tax provision and all is not there. Because as per tax provision, the basic rule is there is something called as arm length transaction. Basically, you can't show the price which is not going to make sense at all. Otherwise, what we will do, will show something more sales in the country where the tax is less, will show less sales in the country where the tax is more. Correct? That should not happen, no? That is the thing. So here, for our examination, how much is relevant, sir? Guys, always remember, international transfer pricing, you should always concentrate on the company point of view. Company point of view, you should always concentrate on company point of view. How, sir? Let's say, guys, India is there. In India, we have one company, Toyota. Correct? Now listen. They need, let's say, steering or let's say gearbox. What is your obsession with that so much? Gearbox. Now listen. Gearbox, they have two options. Option number one, buying it from the Maruti Suzuki India. One more, get it from the Toyota Japan. One, buy it from the Maruti Suzuki India. One more, get it from the Japan. Now listen. If at all, and if you know that Suzuki and Toyota are, now you can tell it as a related parties. Yes, I think in the group level itself, Toyota holds at least 10% of shares of Suzuki. Okay, Toyota holds 10% shares of Suzuki because of the sharing of technology and all. That's what they call. But end of the day, they are all operating in India as a separate company, but net money is reaching into same hands only. Toyota and Suzuki, you go for Kia and Hyundai. Here people are fighting. Seltos is better, Creta is better, Creta's horn is better than truck horn. But end of the day, Hyundai holds 30% shares in Kia. So now these two companies are of same. Now listen. Whether Toyota should buy it from Maruti Suzuki, let's assume they are not related at all, or they should go and buy it from the company which is there in Japan, which is related company. Now, what they should do? Guys, for that, they should look from the company's point of view. What is it, sir? Now, if at all, they buy it from the Suzuki, let's say the gearbox will cost them rupees 2 lakh. If they buy it from Suzuki, the gearbox will cost them how much? 2 lakh. If at all they go and buy it from Japan, let's say it will cost them let's say 1,80,000. Okay, converted to Indian rupees, it will cost them 1,80,000. Of course, for this Japan company, it will cost around 1,60,000 to produce it. Variable cost. Variable cost is how much? 1,60,000. Now, whether Toyota should buy it from the India or they should go and buy it from Japan. Japan. Why, sir? Because net as a company, first place, in the transfer price, if at all they want to give it to someone outsider, for them they are paying 20,000 extra. That way they are saving. If at all I buy it from you guys, let's say Suzuki, I have to pay you 2 lakh. If I buy it from Toyota, I have to pay 1,80,000, which means 20,000 I am saving in that way. Yes. Also, let's make it as 1,70,000. Also, my Japanese company making 10,000 rupees profit. My Japanese company making 10,000 rupees profit. Now what I will do? I will go for. But here one small thing comes into picture called tax. Let's say in India, tax rate is 30%. In Japan, tax rate is 50%. In India, how much it is? 30%. In Japan, it is 50%. Now, guys, you know one thing called as tax benefit. Your FM faculty might have explained while explaining COC. Yes, while explaining cost of capital. Now, 20,000 rupees I am saving, no? If at all, I bought it from India, I would have booked the expense of 2 lakh. I repeat again. If at all I bought it from India, I would have booked the expense of 2 lakh. Okay. When I had booked the expense of 2 lakh, then I would have saved tax to the extent of 40% of it. Sorry, 30% of it. $60,000. Now I am booking expense of just 1,80,000. On this, I am saving tax of. No, I am buying at 180. I am booking expense 180,000. I am not booking 2 lakh expense. I am booking 180,000 expense. How much? 54,000. Try to understand, sir. Why are you telling you are saving tax? You are saving tax. When you are showing PGBP, profit or gain from business or profession, guys, expense will be reducing your income. More the expense, less the income. Less the tax. Which means if you show more expense, your tax will be reduced. Bad thing or good thing? Good thing. Correct? So can I tell my tax savings is rupees 6,000? If at all, I went for 2 lakh, I would have saved 6,000, which means try to understand here the benefit is not 20,000, guys. Here the benefit is 14,000. Here the benefit is 14,000 because if at all I ended up buying at 2 lakh, I would have ended up saving tax of 6,000. Because of not buying it at 2 lakh, we won't be able to we won't be able to save the tax because our profit will increase by 20,000. Try to understand. Our profit will increase by 20,000. On that extra 6,000 tax we have to pay. So savings is 14,000 because of this. And also, there we are earning 10,000 rupees, no? Yes, on the 10,000 rupees extra income, we have to pay 50% tax, which means in Japan also we are not getting 10,000 in hand. In Japan also we are getting 5,000. Net benefit is 19,000. Net benefit is 19,000. Hope it is clear. Yes. So always remember now, whenever the taxation is there in the international transfer pricing, just don't think from these two point of view. Just don't think from this point of view. After tax, you take the net benefit to the company. But still here, net benefit to the company is positive only. So we will be fine with. We'll be fine with going for a transfer pricing to our own company's division. Sir, can you explain the tax part again? See, if at all I buy it in India, I end up paying 2 lakh rupees as expense. If at all I buy from Japan, I end up paying 180,000 rupees, which means I am saving 20,000 rupees. If you are saving 20,000 rupees means you are showing 20,000 less expense, correct? When you show 20,000 less expense, 20,000 profit will be more. When 20,000 profit is more, on that, Nirmala aunty will ask tax or no? Of course. How much? 6,000. Which means, although you saved 20,000, you have to give the share of Nirmala aunty to Nirmala aunty. Which means you will be left out with how much? 14,000. Got it? That is from this point of view. There, Japanese company, our own company is earning a profit of 10,000 there, extra profit. Correct? Now, when we are making that extra 10,000, there someone who will be sitting as a finance minister, they will ask, no, pay tax. And when you pay tax, how much you will pay? So net you will be left out with. So the decision should be taken on this 5,000 and 14,000 rather than your 10,000 and 20,000. Got it? This is the thing. Hope it's clear. Yes. Here I didn't consider opportunity cost. If opportunity cost comes into picture, then again that also should be considered. Opportunity cost and all should be considered, if at all. Because now if at all Japanese company is operating at full capacity, now if at all they want to send you at 180,000, that means opportunity cost also will come into picture. 10,000 you can't take it as a benefit straight away. Why? If at all, let's say they would have sold it to someone outsider, they would have sold it at 190,000. Because they are selling at 180,000 to you, can I tell they are losing 10,000 there in terms of contribution? Which means there it is tax benefit. Net they are not losing 10,000 rupees. Net they are losing 5,000 rupees. Why? Because contribution is reduced by 10,000. Profit is reduced by 10,000. Then tax also is reduced by 5,000. That means out of 10,000 what we lost, 5,000 anyhow we would have ended up paying tax, which means net what we lost is 5,000. Like that you should consider when the opportunity cost is also there in the picture. Got it? To some extent you guys got it? So always remember whether should we go for the transfer pricing or no international, you should always think from the group company point of view. Overall the benefit is there, go for it. Overall the benefit is not there, don't go for it. You should look from the overall benefit point of view. Shall we see one question here? Look at the 8th practical problem. All other 10 questions are done, right? Concentrate on this question. Don't write. First concentrate, then you can write. First concentrate. Assume that division X, which is part of XYZ group, manufactures a single product A. Okay. Division X maximum capacity is 4,50,000 units in a year. So there is one division X. Correct? Now what they are telling, division X maximum capacity is 4,50,000. Done. It sells 420,000 units to the external customer at a price of 75.95. Sales 420,000 and to the external customer. So selling price is how much? 75.95. Try to understand one thing here. Now, if at all we get any offer from any of the group companies to buy it, always remember for the first 30,000 there will be no opportunity cost, because although we have capacity of 450,000, we are operating at only 420,000, which means 30,000 is our idle capacity. 30,000 is our idle capacity, accepted or no? Which means for that, if we are able to recover any money towards variable cost also, we are fine with it. Now, this gives division A contribution of 30.5. So, this is giving contribution of 30.5. Therefore, variable cost will be how much, guys? 45.4. Yes? 45, right? Variable cost is 45.45. Done. Going to division Y. Y is also part of XYZ group, but situated in a different place to division X. Different country, you can tell. Division Y purchases 120 units of product A each year from the local company Z, which is not forming part of group, which means they are telling that Y division also need product A, which is produced by division X, but it is buying from outside. It is buying from outside and at a local currency price, which is equivalent to 65.33. So, division Y. Correct? Requirement for that product is how much? 120,000 units. Not for product Y. Product of Y. They are going to use product A, which is produced in X, in their production, which is equivalent to 120,000 every year. And the purchase price is how much from the local vendor? 65.33. 65.33. Got it? Okay. Now, it has been suggested that in the interest of maximizing the group's profit, division Y should purchase from division X. Now they are telling, stop buying from the company Z, because they are not our group company at all. Someone outsider is taking and going our money. Better stop it and start buying from division X. As there is no market cost involved when the transferring goods to division Y, division X should set the transfer price as 69.6. Guys. Transfer price they are telling how much? 69. Try to understand. This is not because it's our group company. This is because we don't have to incur marketing cost, which means we are not compromising with our contribution and all. So marketing cost will be how much then? 6.35. Earlier, you are selling at 75.95. Now, because of there is a savings in market price, You are transferring these guys at 69.6, which means around 5.3, 6.35, you are able to save just because of marketing cost, which means, is there any compromise in your contribution? No. See here. This would give division X the same contribution of 30.5. So moral of the story is, if the transfer price is 69.6, your contribution is going to remain at 30.5. Your variable cost will be, earlier it was 45.45, no? Now it will be minus, how much it is? We told 6.35. It will come to, sorry, got it, got it, yes. Next, division X would give division Y's order priority and some external customer could no longer be met because the idle capacity, madam, the idle capacity is only 30,000 units. Correct? But the requirement is 120,000 units. Idle capacity is just 30,000 units, but the requirement is how much? 120,000 units. Which means other 90,000 of the customers you have to sacrifice. But here, what is the best part, you know? Opportunity cost is not there. Guess why? Although our selling price and transfer price are not same, end of the day contribution is same, no? Whether, see, that 30,000 is my extra contribution, I agree. Because if I don't sell it to, let's say I am a division X, if I don't sell it to division Y, then I will not produce it at all. Which means contribution from that 30,000 units I will lose. But coming to the remaining 90,000, if I sell it to company Y also, I will end up making 30.5 rupees as contribution. If I don't sell it to Y, I will sell it to outsider also, I will make 30.5 as contribution. Which means, am I losing anything or gaining anything from that 90,000 units? No. As a division, as a company, we are gaining only and only from that extra 30,000 units of production. Hope you guys got this. Okay. Now, requirement. Should division Y continue to purchase from company Z or switch to division X in order to maximize the group profit if tax rate in the country in which division X operates is 25%, tax rate in division Y is 30. So right now, tax in which company X is operating, how much it is? 25%. In which the company Y is operating? Got it? Next, the tax rate in the country in which division X operates is 40% and tax rate in division Y's country is 20%. Ulta. Now it is 40% over here, one more 20%. Got it? I don't think so. I have to explain about the tax benefit again. Hope you guys understood that. Because I'm damn sure Vindhya ma'am would have explained. Because COC and all is there, no? They will learn it, no? That is the thing. Go through this question, we'll start. We'll proceed. Yes? Done reading question? No, no. First, when tax rate of division X is 25%, when tax rate of division Y is 30%. We'll start. Listen. For the company, there will be two benefit will be there. Benefit number one, how much extra contribution X is going to make. Benefit number two, how much extra savings division Y is going to make. Shall we start? First, we'll think of division X. Now, additional contribution to company X. See, I'm taking only contribution because we know that we are operating well within the limit, well within our capacity, which means increase in fixed cost will be there. Whether you produce 420,000 units, whether you produce 450,000 units, net you would end up making same fixed cost, incurring same fixed cost, which means fixed cost is same. Then I told you when we are doing marginal costing, your incremental contribution itself will be your incremental profit. Okay. Now, how much is the additional contribution? Guys, one thing you have to understand here very clearly. I know we are selling 120,000 units, but idle capacity was only 30,000. Remaining 90,000 we were already producing and we were already selling and we were already making 30.5, which means try to understand, if you want me to divide that 120,000 into 30,000 and 90,000. 30,000 and 90,000. Now, how much contribution we will make here? 30.5. Here, 30.5. Correct? Guys. Earlier, before transferring it to division Y, relating to this 30,000, was I making any contribution? Was I getting any contribution? It was idle, no? We were not producing only, which means we were making 0 rupee from there. However, from this 90,000, don't you think we were selling it to outside customers? And we were making contribution of 30.5, which means additional contribution is only and only from the additional number of units sold. If at all the amount of contribution was different, then our answer would have changed. If at all they told that new contribution will be 25, then I would have told, okay, instead of selling it to outside customers, because of selling to division Y, we are losing 5.5. That I would have written it as loss. But here, nothing like that. Whether you sell it to outside customer, you are getting same amount. You sell it to your own division, you are getting same amount. Moral of the story, you are losing nothing, you are gaining nothing from that 90,000 units. If you are gaining something, that will be clearly from this 30,000 units. How much it is? 9 lakh? 1.5. So you are making 9,15,000 extra. Correct? However, on this 9,15,000, do you think Nirmala aunty will keep quiet? She will tell, no, boss, you earned 9,15,000 extra. Where is my share? Why you need your share? Can't you see metro construction there? Can't you see roads? Can't you see infrastructure? Then you have to pay tax. Minus additional tax. If at all it was loss, we would have got tax benefit. As it is gain, we are getting additional tax payment. How much, sir? 9,15,000 and we are talking about division X. Division X will pay tax in country where division X is located or division Y is located? X is located. What is the tax rate? 25. 2 lakh? 750 na? Net benefit. So, by transferring to company X, division X, will be able to make 6,86,250 more in India. Let's say now division Y is located in Japan. Okay. Division Y is located in the Japan. Guys, in Japan they are getting that product for how much rupees? 65.33. They are getting 65.33. Now, just because they are going for transfer pricing, they end up paying 69.6, which means it is not a benefit to them. It is a loss to them. It is loss to them because they are paying more than what they would have paid to local vendor. Shall we see? Additional expense, additional cost incurred by division or company Y, because it is group companies, means even Y is also one more company. Now, listen very carefully. Guys. Are we quoting them price something like this? For 30,000 different price, for 90,000 different price? Straight away, for whole 1,20,000 units, for whole 1,20,000 units, we end up paying rupees 60? Hey, 69.6. We end up paying 69.6. Whereas earlier we were paying 65.33. So, how much is the extra cost we are incurring due to transfer pricing? 5 lakh? 12,400. Correct? Okay. However, we are showing extra expense of 5,12,400. If we are showing extra expense of 5,12,400, my tax will be more or tax will be less? Tax will be less. Hey, extra expense. When you show more expense, less profit, less tax. So I can't tell whole 5,12,400 is the amount I lost, because of losing this amount, you are going to pay less tax. So tax benefit is there, minus tax benefit. How much will be the tax benefit, sir? 5,12,400 on that division wise tax rate, which will come to 1 lakh 3 lakh 3,58,680. Hope it is clear. Yes, net cost I will write. So that is loss. So try to understand. Loss of 358,680, gain of 6,86,250. So overall as a group company, are we gaining or are we losing? Gaining. So should we go for transfer pricing or no? We should go for transfer pricing. As group company profit shall be increased by, guys, how much is the increase in the profit actually? 3,27,570. As a group company, profit shall be increased by 3,27,570. Therefore, if you want to calculation, you can write down the calculation also. Therefore, it is advised to, what they are asking, conclusion, advised to switch to division X. Got it? If at all they asked from particular division point of view, then we would have told for division X, yes, sell it at transfer price because we will end up making extra profit. For division Y, we would have told no. In that case, we would have ended up making dual rate system or something like that. Got it? So now we'll be going to the next point. B. When the tax rate is 40 and 20. When the tax rate is 40 and 20. Shall we see? Not much things will change. So I will show it here only. Guys, will there be any change in contribution and all? Of course, no. Tax has nothing to do with the contribution. However, additional tax on 9,15,000, you are going to pay at what rate? For X, it is 40%. 3,66,000. 5 lakh. So your net benefit will be 5,49,000 to division X. Net benefit will be 5,49,000 for division X. Going to division Y. How many percentage? 20%. We end up paying tax of 1,02,480. So 4 lakh 9,009. Correct? So still benefit only is more. 1 lakh. It is still advised to go for that. Because net benefit only we are getting still. Although tax rate changes, still we are getting that net benefit. Hope it is clear. No doubt? Paka. Take it down then. Hope you guys understood international transfer pricing. Yes. Now, when you go to your finals, when your income tax you start studying, there you should clear it of all these things. Because there it works in different way altogether. Government won't going to listen to all this drama. They will be like, boss, you are trying to evade tax. That's it. So you should go for the arm length. Here actually, in fact, price is at arm length. If you see carefully. For external customers, we are selling at some amount. their marketing price was there. Here marketing price we won't be having there. So we reduced it. End of the day, we are either it's external customer or either it's our own division. We are selling at exactly the market price only. That is the thing. Got it up? Take it out. Till where it's done. You have done it. Very good. When?
I understood the first part, so I did the second.
We are doing first part only still. We are writing first part only.
Finished it off.
When?
Then you write the given part.
Correct.
Then I did the other part.
Okay. And now you should be doing second part then. Then first part, where is it?
When you were finished,
End of the day, you wrote when we were discussing. And I asked you, rule is rule. First day only I allowed you once. Pass your book. Fast. Book and pen. Fast. Till net benefit it's done na. No na. I won't tell. Give pen, I will tell why I want. I will write and give. No. I won't tell, give. Huh? Fast. Pen also you got, huh? I need pen. I think this will be the third person, no? Yesterday I have striked off one more person's answer. Whose it is? Who? Oh, yours. Done. Till conclusion it's done now. Fast. I wrote in red ink, that doesn't mean that you also should write in red ink, madam. You don't have other color pen at all. Done it is. Conclusion. Hey. From second one now. This one now. Additional cost incurred. Oh, there from second line. So you are telling me in that 3 minutes you wrote only one line. Second line. Hey Dhanush. What time pass you are doing? Hey, which is chapter number 4, 10th question? Numerical. LMR I told, that balancing figure stuff, sir. Hope it's done. So always remember, in the international transfer pricing, generally we'll be looking from the company's point of view rather than each and every division. So when finding out the company's point of view, all we have to do is how much is the extra contribution we earned in one division after tax, because we have to pay tax on that, and how much expense we incurred. In my example what I gave, there I made both win-win situation, because I took the transfer price less than market value, all those things. But in this example, what in this illustration or in this question, what is happening? we are sending it at more than contribution. I mean, more than their vendor's price, local vendor's price, which means they are losing. But just because they are losing, we can't decide that. Don't go for that, because we should decide on the basis of net benefit to the company rather than separate divisions. Don't forget that. And mark this question as LMR. Mark this as LMR. We'll take a break now. Thank you. Break till 10:30. We are starting at 10:31.